All right. Hello, everyone. We have Nathan here with us today, and we're going to talk about veterans benefits when it VA home loans and discuss some of the basic rules around it and dispel just a couple of myths. So, Nathan, go ahead and introduce yourself.
Yeah. So my name is Nathan Nix. Been a loan officer for probably about like 6, 7 years, but more importantly, I was an 8-year Marine Corps veteran. And from the process of trying to buy a house myself, there's a lot of difficulties that I dealt with. And in being in the mortgage industry, I've realized that the veteran community is severely underserved, specifically with this benefit. And it's not because it comes from just a lack of education from every standpoint. Veterans aren't getting enough education when it comes to their separations once we're transitioning out, and then loan officers themselves. Loan officers, we're the ones I think that are most to blame because we don't take enough time to do the education with real estate agents, with other veterans, and even within our own community. A lot of loan officers just simply don't understand the powerful benefits of a VA loan. So I've made it my purpose to educate as many real estate agents and veterans as possible, along with other loan officers, on helping fight the good fight with veterans attaining home ownership.
Absolutely. Can you tell us who qualifies for VA?
So there's a couple different types of eligibility statuses specifically with the VA program. So you have your active duty active duty, those that are currently serving right now, that's full-time, 24/7, that is your sole purpose in life. Also, veterans, anyone that has are veterans obviously they're separated from the military. And that's a big question that they have is am I eligible for the program? Well, if you were ever active duty for any period longer than 90 days during wartime or 180 days during certain peace times, then you most likely be eligible. But we have other classes as well. We have National Guard and reserves. And their eligibility requirements are a little bit different if they've never been on active orders. And it's typically we have to have about 6 credible years of service. Now, it's important to determine your eligibility as soon as possible because there are times when a veteran might think that they're eligible and they may not be eligible. And you might be going out as a real estate agent or as a veteran, you're looking at all these houses, you want to put in all these offers, only to find out that you don't meet those eligibility requirements, or there's some extra steps that have to be taken in order for you to obtain what's called your certificate of eligibility. It's a golden ticket when it comes to the Marine Corps. That certificate of eligibility, is the most crucial document in this entire program because no VA loan can close without it, period. Doesn't matter if you make $1 million a year and you have no debts. If you do not have that certificate of eligibility, you cannot close a VA loan. And that should be the very first thing that is done anytime you speak with a lender when you are wanting to begin the process. Every time that you're looking to do a refinance or a purchase, you have to obtain that certificate of eligibility. And so, again, that's your active duty veterans, National Guard, reserves, and the forgotten class are surviving spouses. Surviving spouses they can absolutely be eligible for a VA loan. There are certain criteria that they have to fall in specifically, but it's always worth asking. I teach my realtor partners that when you're having these conversations with these buyers, because you're doing these buyer consultations and you're asking your initial qualifying questions, it's, hey, are you or your spouse a veteran? And the importance of that is, one, you're asking these questions so that you're giving them the widest range possible of all the different types of loan programs out there. But specifically, you or your spouse, one, you're not always talking with the veteran, and you may get the response of, well, no, I'm not, but my previous spouse was. And from there's follow-on questions that we can ask because they might be eligible for this loan program and literally have no idea that they ever were. And now you as a loan officer, you as a real estate agent are opening up this whole different type of financing that is so advantageous for them that they never even thought about. So those are 4 different, we call them statuses. The 4 different statuses: active duty, National Guard, reserves, and surviving spouses. All 4 of those can be eligible for the VA program.
And is the certificate of eligibility difficult for people to get? How would they get it?
So your certificate of eligibility can be obtained in a couple different ways. You can get it straight through the VA. There's a form you can fill out and they can send it to you. For those that are tech savvy, you can pull it yourself through e-benefits, or the simplest way, which I would say, is your lenders have access to what's called WebLGY, or we may hear it as the VA portal. And it takes us about 10 seconds to pull a certificate of eligibility. We need two pieces of information. We just need a full social and your year of birth. And we type that into the VA portal. And as long as you fall in, again, certain criteria, which a vast majority of veterans and active, service members fall into, it'll automatically pull that certificate of eligibility. If it does not, and we have to manually request this, this is more common for National Guard and Reserves. They do more often than not have to do manual request. At that point, we just have to gather certain documentations to prove that you've met certain criterias to be eligible, like your length of service. Again, those that were active duty and those that have only been on reserve status or National Guard status, they have different eligibility criterias, and we have to submit documentation to show the VA that you do fall in line with that criteria, as well as certain types of discharges. Those that were active duty, as long as you were active duty and you did not have a dishonorable discharge, you should be good as far as your discharge status. But those that are National Guard and reserves have to have an honorable discharge. So that's a key difference right there. And we only know if we need to do that by trying to pull that certificate of eligibility right away, which is why it is so important to do this right up front. Save yourself time, save everyone time.
It's 10 minutes, you said.
If that, well, 10 seconds, not even 10 minutes. It takes
10 seconds.
takes about 10 seconds. Like I said, those two pieces of info, we just plug them in, hit submit, and if it, it's probably something like 80-90% of the time, it automatically pulls back for us.
What is a DD 214 and when does that come into play? Because there's the certificate of eligibility, which is really easy to access and quick to get. It tells you whether or not you're eligible. But what is a DD 214? Because I'm under the impression that's also required.
So a DD 214 is specifically an active duty discharge form. Specifically, so those that were never on active duty orders, again, National Guard reserves, if they were never activated, they will not have a DD 214 outside of their initial training. Now, it's not required if that certificate of eligibility automatically pulls through. Okay, so, and again, this is why it's always important to work with, in my opinion, a specialist when it comes to VA loans from the lending side. Because again, if you are someone who did 10 years in the reserves and you never went on active orders, and I have to pull your certificate of eligibility, but I'm asking you for a DD 214, you just aren't going to have one because you were never on active orders. So that comes into play when we have to do a manual request, and a DD 214 will have very specific information about your time on active service that we plug in, and that will again prove that you've met your length of service along with your character of discharge, your character of service. Because on that form, it lists entry date, separation date. And at the very bottom, you'll hear, or it'll list out your character of service or how you were discharged. So it is an important document if we have to manually request for a certificate of eligibility. It is not always required up front.
Okay. And how long does it take to get a DD 214 typically?
To obtain a DD 214, most veterans, most active duty, I can tell you, like a lot of my Marine Corps friends, we hold those things tight. That's like our ticket out of the military in most cases.
Like a birth certificate.
It is, yes. Think of it, it's almost like a death certificate from our time in the service, right? Like that allowed us to get out. That was our end of contract.
Graduation, your diploma.
Exactly. So it's a very important documentation for many active duty veterans. And how you can obtain those, there's different ways that you can obtain them. A lot of times you can go through the National Archives. You can call your old units. There's a handful of different ways that you can obtain them. But what's nice is a lot of things are electronic now. So it's an email, it's a phone call that we can make to certain places. It's an online system that we can go in. We just type in certain information. Like I said, the National Archives is great because what they do is they have so much of this stuff stored up, and all they got to do is search your social, search your profile, and they just email it directly over to you.
Awesome. Thank you. So let's talk about what are the benefits of the VA loan. Why would I want to use a VA loan versus a conventional or an FHA?
So the key word in that question is benefit. The VA loan is an absolute benefit to our service members. Why? Because they are the ones that chose to do what the 99% chose not to do, which is joining the military, joining the Department of Defense, fighting for our nation against both foreign and domestic enemies. And as a result of taking that sacrifice and swearing an oath to our country, you have now earned a benefit of purchasing a home 0% down. It doesn't mean that they're a weak buyer. It doesn't mean that you're somehow lesser than because you don't have to put money down. No, that is literally your earned benefit that you have obtained through your service. The same way, no one seems to really bat an eye about veterans going to college for free utilizing our GI Bill. We think that's an honorable thing to do. They deserve it. But when it comes to the home benefit, it's for some reason looked at a completely different way, but it's the same thing. It's a benefit. It's something that we've earned. I always say it. I say it over and over. It's an earned benefit. So the biggest thing that's obtaining to a lot of veterans is the 0% down aspect. You don't have to put any money down in just most cases. On top of that, VA loans are what's called guaranteed. And I'll get a little technical here for a second, but what that means is at any point, if a veteran defaults on that loan, the lender is guaranteed 25% of the loan amount back. And that's why they don't have mortgage insurance, right? So what is mortgage insurance? Mortgage insurance is essentially, it's an insurance policy placed against you as the buyer for the lender, protecting the lender. And you as the buyer, the borrower, is the one paying an insurance policy against yourself for the lender. So that's what mortgage insurance is. It's a protection in the event that you can't pay your house, the lender's protected. But again, VA loans are guaranteed. So on conventional FHA, as long as that mortgage insurance is placed on that loan, the lender's protected. As soon as it falls off, which everyone tries to get to that 20% equity so we can request our mortgage insurance to fall off, the lender is no longer protected.
Yep.
But a lender is protected for the entirety of the loan with a VA loan. And that's why they're called guaranteed. And the reason why that is there's a fee called a funding fee. And it's a small charge, a small cost on every single VA loan that essentially feeds into a large pot of money that the VA essentially dips into and pays the lender back in the event that a veteran defaults. So there's always a large, like a large liquidity pool that the VA has access to pay back these lenders to ensure that that guarantee is always in existence, to ensure that veterans don't have to pay mortgage insurance because they are always protected. And because they are guaranteed, and it's a government-backed loan, that also provides them with lower rates. They are significantly lower than these conventional loans. And so that's going to make your payment much lower. So you have 0% down. If you choose to not put any money down, about 25% of veterans will still put a down payment down. So you have the ability to go 0% down, lower interest rates, no mortgage insurance. From a lender standpoint, it's the safest loan that we can do. So just that alone. And on refinances, if you're a veteran that's looking to refinance, you can refinance 100% of your home's value. No other program is going to allow you to do that. 100% of that loan's value. And again, still not have mortgage insurance.
Yeah, that's a great point.
From a real estate, go ahead.
I was just going to say, I wanted to quickly reiterate that and talk a little bit about the mortgage insurance, because most people, or some people, a lot of people don't have 3%, 20%, 20% down on a home, which is required if you're not going to have mortgage insurance. Anything less than that is going to require you to pay mortgage insurance when you purchase a home. And that can add a couple of $100s a month to your monthly mortgage payment until you get that mortgage insurance off of there. You get to a certain point in equity that you can get that off of there. So I just wanted to stop right there and just kind of highlight that, because that's a couple $100s less than what you would pay if you weren't to put 20% down.
Yeah.
And the lower interest rate. So a lot of people think benefit, they think, oh, obviously we're going to have higher interest rates, because whenever somebody gives you something, it's going to be a higher interest rate. Most of the down payment assistance programs do work like that. But in VA benefits, it does not raise the interest rate. It's actually lower interest rates typically.
It's a government-backed loan.
Yeah.
So because of that, same thing with FHA. So FHA has lower interest rates because it's a government-backed loan. And again, with that guarantee portion, like you were just saying, the guarantee makes it a protected loan. And as long as it helps mitigate risk. And that's what an interest rate really is. An interest rate is a great representation of how risky you are or how risky that loan is. The higher the interest rate, the more risk that's involved. It's one of those reasons why sorry, phone just started going up there. So it's one of those reasons why if you put 20% down on a loan, sometimes you may see an interest rate go up a little bit. Why? Because that mortgage insurance is no longer there. So that protection for the lender is gone. If you have lower credit score, right? You're a higher risk of not paying back or defaulting. So that interest rate is higher. So same thing with if you don't put a larger down payment down, right? So you'll see a difference in an interest rate between someone that puts 3% down and 10% down, because someone that puts 10% down is putting a little bit more skin in the game. So there's all these things that play into an interest rate, and you can definitely tell how large of a risk you are based off of how high your interest rate is. Same thing with an investment property. Why are investment properties so much higher when it comes to interest rates? Because they're a higher risk. You know, if I'm down bad and I'm starting to fall behind on my bills and I have a primary residence and an investment property, which bill would I start skipping first? Well, it's definitely not going to be the place that I live at. It would be my investment property. And because of that, lenders have to protect themselves. It's hedging. You get a higher interest rate.
Makes perfect sense. What about credit score? Is there a higher credit score that you need to qualify for VA? Lower credit score? Is it about on par with other lending programs?
So credit scores are it's always good to have a better credit score. But one thing that a lot of people don't know is the VA itself does not have a minimum credit score. You can look in this thing called the 26-7, that's the VA handbook. There is no minimum credit score put in there, period. Every minimum credit score that you see is specifically dictated by that lender. Some can go down to like 500, maybe even lower. Others want to see you up at like 620, 640. So again, that's a risk-based thing. But the VA itself does not dictate a minimum credit score. And what's really nice is they allow you as well, many lenders, they'll allow you to have a less than perfect credit score. But because of the way that the VA guidelines are, there's a lot of gray area in there. And that allows people like you and I to make the loan make sense to an underwriter. And as long as we can do that, you have this chance to do what's called a manual underwrite. And a lower credit score can be manually underwritten and still receive an approval.
So if I have a 500 credit score, should I at least inquire to see if I would be qualified for a VA loan, or do you think I should just wait because most lending programs say 500? No, come back when it's 580.
Right. It's always situation dependent. If you're in a position where you can afford to purchase a home but you just simply have a lower credit score, sure, it's not going to hurt you to find out, right? I would always suggest, hey, let's see what we can do to maybe make this a little bit better for yourself. Because again, when you have that lower credit score, you're going to see some pretty harsh penalties that are coming your way, mainly at the cost of an interest rate. But if you're in a position to where maybe you have to buy, you got to get out of a situation, or you're just in a time crunch, and that's where your credit score is at right now. Yeah, absolutely. Absolutely. Because maybe you just have a low credit score because you have some negative remarks in your past. Oh, by the way, if you had a bankruptcy or foreclosure, you can still qualify for a VA loan. Most programs, they require you to have to wait, anywhere between like 2-4 years before you can be eligible for that program. It's possible, very slim, but you can be less than 12 months in a bankruptcy and still obtain a VA loan. If you have a Chapter 13 and you're over 12 months and you've had on-time payments and you've had what's called reestablished credit, then the possibility of you still getting approved for a VA loan is there, absolutely. Where a lot of other programs are going to turn you down and say 2 years minimum. But maybe you just have a low credit score due to some blemishes in the past, but you have great income. You have plenty of assets. You have what's called compensating factors. At that point, sure, we can take a look at it. And that's where that manual underwrite can come in.
Interesting. Okay, wonderful. Thank you. So let's talk about eligibility. How much does a person qualify for? So if I want to buy $1 million house, can I buy $1 million house, or am I capped at a certain amount?
So there is no maximum loan amount on a VA loan for someone that has this thing called full entitlement. So think about it as a credit card. If you have a credit card that has a $0 balance, you can purchase however much you want as long as you can qualify. There's a difference between being qualifying for something. We have to take a look at your income. We have to still take and make sure that you can afford that house. However much you can afford, you can purchase 100% of that loan amount, of that purchase value, with the VA loan. So yes, if you can qualify for a $2 million house and you want to put 0% down on it and you have full entitlement, you can absolutely do that. Where loan amounts, maximum loan amounts come into play are in situations like if you want to have multiple VA loans at the same time, which you can do. You can have multiple VA loans at the same time. Then maximum loan amounts are going to come into play. Or let's say that you have had a foreclosure or a short sale where at some point you've defaulted on a VA loan in the past and you have not paid the VA back. You haven't what's called restored your entitlement. At that point, then you're going to have maximum loan amounts come into play. I won't get into the weeds of the calculations of how that's done. But just understand that, yes, for someone that has full entitlement or a first time user, this is your very first time using your VA benefits, or let's say you used your benefits, bought a house, sold it, now you're back to full entitlement. You have no maximum loan amount depending on how much you can qualify for.
That's awesome. And I just wanted to stop really quick and highlight that you said you can use VA loans for multiple homes. So it's situational, of course, but if you have a current residence and you've used your VA for that current residence, it is possible to get us to keep that residence and get a second property with a VA loan. So
Absolutely.
I just wanted to call that out because that's really important. I don't think that's widely known.
Absolutely. The key factor in this as well is your intent. VA loans are intended for veterans and their families to occupy the property. So let's talk about active duty service member really fast. For someone that's active duty, you have the possibility of PCSing, permanent change of station, or moving from one base to another one. Or let's say someone that's separating from the military, but you currently have a house wherever you're stationed at, and you want to retain that house and purchase a new one either at your new base area or back home, but keep a rental property. You can do that 100% because you intend to leave that residence and occupy this new one that you're purchasing. That's going to be your primary residence. As long as you intend to occupy, bam, you can use the benefits again. Another fun factor is you have to, again, like I was saying, you have to intend to occupy the property, owner occupied. But what happens if I'm in the military, I'm stationed somewhere, my family back home needs a house? Well, I can't go back there, so I can't satisfy occupancy. But your spouse can, your dependent child can satisfy occupancy. So as long as one of those two individuals is going to occupy that home that you're purchasing, and they intend to utilize that as their primary residence because you cannot satisfy occupancy at the time, they can check that box for you.
Wow.
Someone that's deployed, that's another great way. As long as they intend within a reasonable time to come and occupy that property. Reasonable time can be anywhere from 60 days to 12 months. It just depends on the circumstance. But there are ways, as long as the intent is as long as the intent is for the owner to occupy the property, not a second home, not a vacation home, not an investment property, but primary residence, that is a key factor. And you can depart one primary residence to purchase another one, and both can be VA loans.
That's awesome. That's great information. I wish more people would utilize that. It's a
Mhm.
wonderful benefit. And neither one of them have mortgage insurance, by the way. I'm gonna keep
Correct.
saying that. That's big.
And here's what's cool too is one thing that people then get worried about is, well, how do I qualify with both homes? They're both going to have payments on them. How am I going to be able to qualify for them? Well, if you're going to retain that departing residence, but you plan on renting it out, what we can do is, even if you don't have a renter in there or a renter lined up, that's when you call up Raquel and you say, hey, I need a market rental analysis. I need to find out how much the area around me is the going rate for my type of property and what that rental amount will be. As long as that market analysis supports enough to cover that mortgage payment, you can offset that debt altogether. So basically exclude it. And now you're qualifying just off of the payment for the new property. That's something that's very specific with VA loans. Now, if you want to use it, if you've been renting it out for 2 years and you have it on your tax returns and you're making an extra $1,000 a month, perfect. We can count that. But if that hasn't happened yet, in order to help you qualify for a new home, we can completely offset that departing residence payment as long as the rental analysis supports it.
That's amazing. Great information. Thank you so much. Couple more things before we get going here. I don't want to keep this too long. I want to make this sort of a shorter video. I want to see if I can dispel a couple of myths or at least talk to you and see what your answers are about these myths that we hear quite often, which is VA appraisers don't appraise as well as or as high as other appraisers. Have you heard that before?
Oh, yeah.
What is your thoughts on that? What are your thoughts on that?
My thoughts are this is not 1992 anymore. From my understanding, there was a point where that was somewhat valid, where appraised is it was more difficult. Keep in mind that what I was just saying, the point of a VA loan is for a veteran and their family to occupy that residence. The VA does not want veterans and their families occupying trash households. Again, they're not meant for investments, right? The intent of these things is for a veteran to walk into this house and to live in it. Therefore, they want a house that is livable. But there are 3 S's that you just have to keep in mind. Is it safe? Is it structurally sound? Is it sanitary? Would you trust your 3-year-old child to walk around this house and be safe? That's an easy way to look at it. If the answer is no, then it's just not a safe house, and the VA doesn't want to appraise it, or they're going to have it come back subject to. They want you to fix these things. I'm not sure the exact numbers just yet because I got to take a look and see if they release numbers for 2023. But last I knew, the VA was actually had the highest at value percentage out of every other loan program right now. So what that means is you have the best chance of a house appraising at the value that you needed to with a VA loan in the current market.
That's great.
Every VA appraiser is also a conventional appraiser. Not every conventional appraiser is a VA appraiser. And this is real estate agents. I am talking to you. So when you guys are saying, God, why do we, why is this VA appraiser? They suck. If this is just a conventional loan, it would be so much easier. Well, that same appraiser is also doing conventional appraiser. So you can have the same guy doing both. You have a property that's under contract as VA, one that's conventional. You can have the same individual doing both those properties. And at the same time, a lender does not pick the appraiser when it comes to VA loans. Every appraisal is ordered through the VA portal, and the VA assigns an appraiser to go out and inspect that home. But
And
let's talk about what happens is if it does come in low, right?
Okay.
Because that happens. Literally happened to me today. Had a house come under $7,000 light. There are 2 attempts to regain value on VA appraisals. The very first one is called Tidewater. And what Tidewater is that's simply the appraiser simply stating that they are not meeting purchase price value. We don't know how much it's off by. We don't know what comps they use. Again, reiterate, don't know what value they are coming up with. They are just giving us an early warning that they are not meeting purchase price value. So at that point, everyone that's involved in this real estate transaction, me as a loan officer, you as the agent, Uncle Tom next door, whatever it might be, all of us can feed information to this appraiser and say, hey, use this additional comp, use this, use that, use this to help boost that appraisal value in the eyes of the appraiser before they issue a value. So let's say you do that. You give them all these additional comps. Appraiser still says, I don't agree with you. Appraisal comes in light. In most cases, you got to try and get that appraisal thrown out. You can do a rebuttal, but you're fighting with this appraiser the whole time still. Specifically with VA loans, you have this thing called a reconsideration of value. And what a reconsideration of value is you take that appraiser, you say, thank you for your time and service, and we're setting you to the side. And we take all of this data and we put in a request straight to the VA. And we say, this is why we feel like this price should be increased. The VA is going to take a look at it. And because they are the ones that are guaranteeing the loan, they're the ones whose money can be on the line, the VA can give you an instant equity boost, regardless of what the appraiser says. Any other type of program, you have to try to continuously fight with the appraiser. You got to try and rebut it, or get that whole appraisal thrown out, order a new one, spend more money, wait more time. But the VA is the only program that has an opportunity for you to go straight to them, state your case, and get an equity boost. That is crucial. The problem is loan officers don't understand it, and they are just simply not doing it enough. It is a very simple process as well. I had one a couple weeks ago. It took about, from the time we submitted it, we got a response back, I want to say in like 48 hours, and they gave us $10,000. They gave us an extra $10K equity boost.
Wow.
Right away. And the reason why we got that equity boost, and this is another important factor, the reason why we got that equity boost was after the appraiser had inspected that house, a home right around the corner sold. So it wasn't a closed deal yet. So the appraiser couldn't use it. But it closed after the what's called the NOV, the notice of value, was issued. Used that comparable now to help support a higher purchase price, and they gave us an instant equity boost.
Mm-hmm. Yeah, so everything's dependent on the circumstance, right? A lot of people would think, well, the appraiser came in low, so that's it. We're, not going to fight it. But there are ways to do that. A lot of people don't want to do that. They don't understand the process, or they don't want to have to go through that extra step to get through that process. And I find that happens all the time. So I love to align myself with lenders and other people who are willing to go that extra mile to get to that next step that doesn't stop and say, sorry, that's too much work. So I love that you brought that up. That's great.
I mean, you got to think of who we're working for here too. And I say specifically say like who we're working for. Like we are, we're working for these veterans right now. Why would we not want to do everything that we can to make this work for them? Why would we not want to go the extra steps, which it's not even a lot of work, but why wouldn't we want to do everything possible to ensure that literally our nation's heroes, these servicemen and women that have signed, we always said it in the military, you signed a blank check in service to your country. They're the ones that went and did this. Why would we not put everything that we have and our best foot forward to help them? Because what happens if we have a seller that doesn't want to budge? So we're just going to tell them, hey, too bad, so sad. We had this option for you, but because I just didn't feel like doing it, oh, well, your inspection money is gone. If you paid for the appraisal already, it's gone. If you did some repairs, that money's gone. And now you have to go do it all at another house. Why, if we have options that are available, why would we not do everything within our power to help these servicemen and women? It's shameful that unfortunately happens way too often.
I agree. I agree. So I would just, I back you 100% on that. It's important for us to help them get what they're entitled to, especially since they've given so much for us.
Mhm.
Okay, the last myth that I'm gonna say here is that VA loans take longer than FHA and conventional to close, more than 30 days. It's
Mhm.
after 30 days.
Well, first off, have a better loan officer. Um, so that again, that's just an untrue myth. There's validity to the thought behind it that just is no longer in existence. I want to say it's like 99% of lenders have what's called automatic approval, automatic authority, meaning they can close the loan and it does not have to be re-underwritten by the VA. That used to be how it was. The lender would go through the entire process, then we'd have to send it to the VA. The VA would have to sign off on it, and then you can close. From my understanding, that used to be the process. That is no longer the process. Lenders have automatic authority, meaning they can close that loan. Afterwards, it's going to get sent to the VA, and the VA has roughly 60 days to guarantee that loan. So there was a point where that was in existence. Now, a lot of people are worried about, well, they take longer to close, again, just like you talked about, because those appraisals, they just take forever. The VA has a timeline for appraisers, a set forth timeline, depending on your state and sometimes a specific area. The VA has they have set in stone a cost of an appraisal. Conventional appraisals can cost whatever that appraiser feels like charging you, not VA appraisals. There is a very specific payment based off of your demographic area on how much you can charge. And on top of that, there is a timeline from the time that an appraiser is assigned that appraisal to getting that report back. In Michigan, it's 8 business days. From the time it is assigned to that appraiser to getting that report sent back to the lender, that appraiser is supposed to have that finished within 8 business days. And if they are going to go over, they're supposed to give you a notice of roughly 3 days in advance. So that curves this whole idea that they just take longer to close because these super long appraisals. And again, like we said before, their guidelines, they're so strict and strenuous. I don't know what that word is. Strict and whatever word I was trying to say. But the reality is they have so much gray area built into those guidelines so that you can do and make whatever you have to work. And it gives them the benefit of the doubt. Okay, cool. To an underwriter, it gives them, we call it underwriter discretion, which means that a lot of things can be put up to the underwriter as long as we can make it make sense. If we can make it make sense and it's underwriter discretion, the underwriter just has to agree to it. Where all these other loan programs, hey, if it's not in this box, too bad, it's not happening. So that also helps these loans close faster. And if you just have a loan officer that's doing things the right way, gathering documents up front, verifying everything, understands the loan program and all the things that go into it, you should have a smooth transaction every single time. If it's VA, FHA, conventional, doesn't even matter. But specific to the VA, one, what needs to happen right away, again, pull that certificate of eligibility, because that will slow your process down if you're trying to do it, if you have to manually request in the middle of the process or at the end. So that's something that, again, an active loan officer has the ability to control. Align yourself with the right people, prepare, set the right expectations, and just understand that this program is literally built to be the best benefit possible for a veteran in any way possible.
I love that. And it's good to know that it doesn't take longer, because all of these myths seem to be predicated on old processes that no longer exist. So it sounds like VA has come a long way to optimize the process and make it a lot easier. So I'm glad that we were able to dispel those myths, because we hear them quite often. And I really, really hope that more people will use the VA benefit. So I really appreciate you meeting with me today to talk about this. Is there contact information that you would like to give out? Phone number,
Of
email?
course. Of course. So if anyone has any questions, whether you're a veteran, real estate agent, loan officer, I literally want to do whatever I can to help whoever I can. start really busting these myths and hopefully having more conversations like we're having right now. More people need to have these talks. Feel free to text me. It's 248-462-9434. That's this bad boy, right? Digital. There it is. That's my direct phone line. Or if you want to email me, my email, it's NNIX, November, India X-ray at SMP Success Mortgage Partners rate.com.
Wonderful, wonderful. Well, thank you so much for meeting with me. I appreciate all of this information that you provided, and then we will talk soon.
Absolutely. Take care.